Welcome to Key Trades on this Tuesday, 1st of March. We're looking at the FTSE 350 mining index in the wake of earnings from Glencore and Fresnillo and ahead of Aussie GDP later on today. Then it's on to US dollar against the Japanese yen. It remains an interesting trade to keep on top of. We're asking if the double bottom remains intact. And ahead of some key US manufacturing data out later on this afternoon at 3 o'clock UK time, we're looking at the benchmark S&P500 or the US 500 on the IG platform. But first of all, to the miners. The sector means so much to us here in the UK as miners comprise so much of the FTSE 100 index, or rather did. The proportion is now less than it was because of the collapse in metals prices hitting the big players. But the Rios, the BHPs and today the Glencores and the Fresnillos reveal more about why times are so tough for their respective stock prices. Let's turn now to Joshua Mahony with some more detail.
The mining sector has been in the ascendancy over the last month and a half. We've seen it really start to rebound. We've seen this inverse head and shoulders formation with the break of the neckline at 75.72. That is a potential bottom sign for the market. So, it's a very interesting level that got broken. We can also see that we've got this descending trend line, previous support, and we've seen it come in for a third time, providing support just earlier last week. Now we are approaching a key level here, 87.63, a break up above there points to something very similar to what we saw here in the middle of February, i.e. a likely next move higher. And when you're looking for a potential target, if we did break 87.63, you'd be looking for that inverse head and shoulders break and projection, which gives you 97.86. So it's starting to look like we could have potentially formed a bottom for the mining sector.
And this highlights just the way that technical analysis moves and can take you into new areas. And this is happening for the US dollar against the Japanese yen. Is the short-term double bottom still in place? So, and how about Josh's trade for 2016, the longer-term head and shoulders for dollar yen? Josh.
So looking at the 4-hour chart, we can see that it's been very interesting that we have essentially bottomed out at this same level, 111.00. Now you can see that essentially we bottomed out on the 11th of February. We saw the same thing on the 24th of February, and that gave us some sort of indication that possibly we could be creating a double bottom. Now we did start taking out the initial swing highs. That was a pretty bullish sign, but then yesterday we crashed lower. We've hit this 61.8 retracement, and now if we look on the 1-hour chart, we can see we have tentatively tried to regain that ground. So at the moment, really, we're getting very mixed signals. We've got higher highs followed by lower lows. We're trying to create that new high. So really, the question is, are we seeing a small flag here for another leg higher? The crucial thing is going to be whether we get a decent closed candle, say an hourly candle above this 113.26 mark. But again, like Jerry was saying, if we look in terms of longer term time frame, you can see we've clearly got this big head and shoulders formation, and a projected target was 107. So there's a good possibility that if we look back on the daily chart, that this essentially could be a sideways consolidation before this downtrend comes back into play.
And finally, we're looking at the broad market index on Wall Street, the US 500 or the S&P 500 index, ahead of some key manufacturing data out a little bit later on today for the PMI number or the ISM at 3 o'clock. Josh.
Looking at the daily time frame, we can see that we formed this double bottom formation. Now, the fact that we didn't necessarily just take off really is a little bit of a warning sign. You can see here 1947 was the neckline. We did break up above it, but immediately started selling back down below that level. So possibly we're not necessarily going to see that big move higher that you would initially be looking for off of a double bottom formation. Looking at the 4-hour chart, you can see that actually we're trending within this clear descending channel. And recently we have been creating these higher highs, higher lows. We did see that one setback in the middle of February, but it's likely that we're going to really resume this uptrend from this channel. But as ever, it's all about when you do see the break. And until I see that break, then I will be looking for this pattern to continue. You can see we're starting to respect this upper end of this channel. So we could sell back down towards 1923. For me to say that we're actually going to see a decent move towards the upside, I need to see a close up above the first swing high, which is 1958.